Hello to everybody out there. This is Marcus Rush again with Rush Realty. I have one of my preferred lenders here, Rob Shannon from Caliber Home Loans. He's going to give you more information about the home buying process, a little over lending, a lot about lending actually. So I'll let him talk a little bit about himself first.
Thanks. My name's Rob Shannon, sales manager with Caliber Home Loans. I have about 20 years experience in the mortgage business. Owned my own mortgage company for years, so I kind of know all facets of the mortgage lending environment. And see if we can answer some questions for you guys today.
All right. So one of the first questions that I always tend to receive when working with buyers is, what is the importance of the pre-approval?
The pre-approval, in my opinion, is the most important item to attack up front, because without the pre-approval, you don't know what you qualify for. You could be looking in the wrong neighborhoods, wrong developments, wrong price range. So with a written pre-approval, it gives you some confidence in your buying power.
I see that a lot. So what I always try to tell my clients when working with them is you want to get the pre-approval because you don't know where you're going to be. So if you're looking for less money out of pocket and things like that, it changes the lending. Correct.
That's absolutely correct. There's so many different loan products out there, varying amounts of down payments, mortgage insurance, interest rates. That it's very beneficial to have that stuff knocked out right up front before you begin the process.
So since you said something about down payment, what is the difference between the down payment and an escrow deposit?
Well, a down payment is essentially money that's going directly towards your purchase price, meaning it is essentially equity that you have in the property once everything's said and done. Escrow is really the money that's set aside. You talk about the good faith deposit.
The good faith deposit.
That basically is just money that secures the contract, because in Delaware, for the contract to be binding, something of value has to exchange hands. So that money could go towards your down payment, it could go towards your closing costs, or in some cases you may actually get that money back at closing. That just depends on the specific loan product that we choose.
Sounds good. So with a pre-approval and a pre-qual, I know some clients tend to say they have a pre-qualification.
Yes.
So I don't think they really understand what the difference is and which one holds more weight.
I see this quite frequently as well. A pre-qualification is basically something that is not worth the paper that it's written on, quite honestly. If somebody were to call in and say, I want to get pre-qualified, I make $10,000 a month and my credit score is an 820, you're pre-qualified. That means I haven't reviewed pay stubs, I haven't reviewed credit report. Really, I'm just going on your word, which is why I don't do pre-qualifications at all. A pre-approval means that you have actually applied, whether it's online or in person or over the phone. I've reviewed a credit report, I've reviewed bank statements. Generally, we've had a 30 to 45 minute face-to-face conversation, and you are basically educated on the types of loan products that we're going to select and why. And that, a written pre-approval, that is basically what allows you to shop with confidence.
Okay. Yeah, so that makes a lot of sense. So I always tell clients to get your pre-approval first.
Absolutely.
Now you definitely know the difference between a pre-qual and a pre-approval. So with all different loan types out there, we have conventional, FHA, VA. Around here, what is the one that you tend to see the most in Kent County?
Actually, about 80% of my business is what we call government loans, which would be VA, FHA, USDA. Each one has their pros and cons, although the VA doesn't have many cons. VA is a fantastic loan. FHA has some fairly expensive mortgage insurance. However, it's still low down payment, it's 3.5%. The biggest drawback with FHA is that there are loan limits. So not every house or every neighborhood will qualify for FHA financing. USDA also has some interesting pros and cons. The biggest pro is that it's 0% down, just like the VA. The biggest negative or takeaway from that is there are income restrictions. So for families 4 or less or 5 or more, there are different income limits that as a household, if the household earns more than that limit, then you do not qualify for a USDA loan.
Okay. What about a conventional? So I know there's a lot of different types of conventionals. There's 3% down, 10% down. What are some of the things that they would need to know about a conventional loan?
Well, conventional loans, as Marcus said, there are some that are only 3% down. However, there are income restrictions on that one as well, similar to USDA, different but similar. The 5% down is really where you get into your bread and butter conventional loans. There's no income restrictions, there's no geographic restrictions. There is mortgage insurance, but that will go away at some point in the future. There are loan limits However, it's $424,100 is currently the loan limit for all of Delaware for conventional loans. That will suffice for most neighborhoods and most homes in Kent County.
Okay. So if a client was to walk in right now, a buyer was to walk into your office right now, what is their worst case scenario? They can probably still get pre-approved.
The worst case would be, basically, I never tell anybody no. I might say not just yet. We've got some work to do first. But the worst thing that will happen by coming in and meeting with me and reviewing the application and everything is that you will have a game plan. You will know exactly what you have to do to get mortgage ready at some point in the future.
Okay. And what is the most ideal client walking in, of course?
Ideal client would be somebody obviously who has good established credit, has stability in income. Some people have worked for 8 different employers over the last year and a half. That does not show good stability, so we want the opposite of that with somebody who has some stability with an employer. Obviously, some money in the bank because even though the no money down deals exist on paper, rarely can you put something together where you're actually don't need any money throughout the transaction. I'll give you an example of that. Is even though if we're doing a VA loan, which is 100% down payment, and the seller or builder is going to pay all the closing costs for you, you still have to have money down for when you write the contract. You have to have money down when you do some inspections. Typically at closing, you may get some of that money back, so it may net out as a zero down game, but you will need funds throughout the process to get to that point.
Okay. And for closing costs, I know a lot of people always ask questions about the closing costs. So the closing costs are not the seller's responsibility. They can pay them. Correct. But what exactly are closing costs to sum it up for like a first-time home buyer?
Sure. So closing costs, many people don't know, but when you have a real estate transaction, there are a lot of hands in the pot. There's a lot of people that are involved to get us from start to finish. You have your appraiser, you have your attorney, you have your title company, you have your inspectors, you have your surveyor, and all these people need to get paid, obviously. So what happens is, when we get to the end of the transaction, we're at closing day, all these people basically have submitted their bills to the closing attorney's office. And at that point, the closing attorney will receive the money from us. We'll receive any money that's already been put down, as far as like a good faith deposit, things like that. The attorney's office collects everything, and then they hand out, basically they pay the bills. So the closing costs is all the fees that are charged by third-party people in the transaction that do not go towards your purchase price. That's why they become something completely different. So you have your down payment, which is your responsibility. You have the closing costs, which is really the buyer's responsibility, but oftentimes the seller or the builder can assist with that.
So I always try to tell a lot of my buyers, don't always guarantee the deal on closing costs if you need closing costs. Closing costs is not a definite that you'll receive it. We can negotiate it, but that may change the terms and the price of the house a little bit as well. So definitely know that closing costs are the buyer's responsibility technically, but we can work that out during negotiations.
Especially this guy.
I try my best to do that. So for a first-time home buyer, what is something you would tell a first-time home buyer as far as getting financially ready, the nervousness that you see first-time home buyers because they're a little jittery, just a common nerves. So what is something you would tell a first-time home buyer?
Basically, trust your team. We're getting paid money to assist you through the transaction. We've been doing this a long time. So have some confidence in the people that you've selected to represent you and help you throughout the process. That's the number one thing I would suggest. Number two is if you're pre-approved for here, don't look at homes that are up here. I see that all the time. You're pre-approved for a certain amount generally. Now there is some leverage or some room to manipulate that. I'll give you an example. The house is in the county at $250 and the taxes are $100 a month on average. A house that's in the city of Dover or Smyrna, as an example, might only be $225, but the taxes are $200 a month. So you may qualify for the $250 out here, but not qualify for the $225 in town. So that's just a side tip. Basically, you're never pre-approved for a definite specific amount. It's basically a range and depending on the actual house.
Okay. So speaking of that, when we have buyers that come in and they say, hey, I'm pre-approved for this amount of money, but now they want to go and build a brand new construction house. So what do you do in those type of situations where a client may think they can do a construction to perm or something like that, but they really need to buy an already built house?
I see that quite a bit too. There are basically, construction loans are basically short-term financing, typically 6 months, sometimes up to a year. And that basically just gets the house built. There are very different qualifications for qualifying for a construction loan. Oftentimes you need 10 or even 20% down, which may seem contradictory because if you have a USDA loan that's no money down, that's fine and dandy, but that's after the house was already built. So if you don't have the 10 to 20% to get the thing built in the first place, the fact that you're qualified for USDA loan really has no bearing because you can't build the house. Construction and perm are very, very different loans than anything we discussed so far, such as the government's and the conventional.
Yeah, I think I see that a lot where people see a pre-approval amount and then they want to get a home built. And I think they need to understand that just because you have pre-approval doesn't mean you can go get a brand new built home. We're not telling you don't work on that. We can do that. We can work on that. But that may need to be cleared up and specified up front if that's something that you're looking for doing. And as far as any lending tricks or tips from a lender's point of view that you have for a buyer, is there something that they should be aware of as far as we have the leverage to do this, we can do this? I know one time I learned about the lease purchase?
Yep, lease purchase, rent to own. As tight as inventory is right now, there's not a lot of that happening, but there are definitely ways to get creative with some mortgages and structure things properly. I'd say the biggest tip I can give is it's going to sound redundant, get pre-approved really as early in the process as you can. Time is always your friend at the beginning of a transaction. Time is rarely your friend at the end of the transaction. So if you think you might want to buy, in the spring, I would encourage you to, apply now. That way, if there's any speed bumps that we need to deal with, either credit-wise or income-wise, we have the time to deal with that now. Not that you found the house that you're in love with, there's multiple bids on it, and then you're not ready to buy it.
That's true. And that was the first video I did. If you didn't go see that video, go watch the buying process video. You always want to get pre-approved because you don't want to have that home that got away. Because I said a million times, people are not pre-approved. They look at homes, then they think they're pre-approved for a certain amount. They go look at that home, and then it's always the home that got away. No other home ever competes with that home that got away. So you just ruin your whole entire buying process, and then you feel like you're settled. So you never want to feel like you settled. Even if maybe getting a miraculous home, you feel like you settled because you weren't ready to get that home that got away.
Absolutely.
All right. So besides that, definitely give Rob a call if you have any more information or questions or looking to see to get a pre-approval. Rob, how can they contact you?
They can reach either by cell or email. Cell phone is area code 302-399-5009, or email, which is robert.shaner, that's SHANER, @caliberhomeloans.com.
All right. Well, thank you very much.
I appreciate it. Thanks, Marcus.
All right, guys. Hope you had a lot of information. Feel free to contact me as well. You can contact our office if you want to get into the home buying process, or if you're even looking to sell. Our contact number is going to be 302-219-6707, or you can email me directly at mrush@rushrealtygp.com. Tune in again. We hope to have some more valuable information for you. Talk to you soon.
Thanks, guys.